IFTA 2020. Now, if we were meeting in person, it would have been such a task for an MC to call everybody inside after the initial morning gossips, tea, coffee, the meetings. But I think this IFTA video, which we play right at the beginning, does all my jobs. And that is why the kind of money I'm getting paid is getting reduced by the day. All right. At least I can see the speakers having a smile on their faces. Good morning, everybody. Once again, welcome to day 3 of IFTA 2020. I'm hoping that the spirits are as high as the last 2 days. And first and foremost, we shall begin with a very, very intriguing panel discussion. The topic for this one is digital banking. Will neobanks be able to disrupt traditional banks? This session is powered by TransUnion CIBIL. Our moderator for this one is going to be Mr. Suchintan Chatterjee, partner, Deloitte, India. Good morning, Mr. Chatterjee.
Good morning, Muskan.
Our speakers for this session are going to be Mr. Ajay Rajan, Senior Group President and Head of Transaction Banking, Yes Bank. Morning, Mr. Rajan.
Hey, good morning, Muskan.
We also have with us Mr. Anand Kumar Bajaj, founder, MD, and CEO, PayNearby. Good morning,
Hello.
Mr. Bajaj.
Hello, good morning.
We have with us Mr. Jakub, Piotrowski, Chief Revenue Officer, Meniga. Good morning. Also with us is Mr. Deepak Sharma, President and Chief Digital Officer, Kotak Mahindra Bank.
Hi, good morning. Great to be here.
Thank you so much. And now I will hand it over to Mr. Chatterjee.
Thanks, Muskan. Morning to all our audience and everyone on the panel. We have a very interesting topic coming up around digital banking with focus on neobanks and the wider fintech ecosystem. And we have a very distinguished panel representing every part of the ecosystem. We have bankers on the panel. We have ex-bankers who are reshaping the fintech play. We'll hear from them. We also have international members in the form of Jakub, who will share his perspectives across markets. So look forward to an interesting conversation. Neobanks has been generating quite a bit of interest, right? I mean, even before the current situation panned out, I mean, there was a lot of interest both from the investor community, customers, every part of the ecosystem and the stakeholders. And there were initially a lot of questions around, will neobanks be able to scale? Will they be able to disrupt the way banking is done? Would they compete with banks or will they collaborate with them? So there were a lot of questions, and with the pandemic and the digital adoption likely to peak in the coming months, we are going to see even more interest in this space. So on that note, we would just request our panelists for some introductory perspectives on the landscape as they see it. If I may start with you, Ajay, be happy to hear your take on the landscape.
You are on mute, Ajay.
All right, sorry, my apologies. So, on the landscape, I think there's no longer the question of will they disrupt or not. Really the advent of neobanks, has already disrupted the financial sector industry, and really the buzzwords for fintechs, bank alike, is neobanking. Really the key success factor is a fully digitized offering, which is really bent on a superior customer experience. So if the question is if neobanks are there, will they survive? The answer is they're already here. They are here to stay, and will help only co-create more value-added solutions. So more, when we speak in the panel, but I think that's the initial remark.
Sure. Thanks, Ajay, for that. If I can bring you in, Anand, I mean, you've been on both sides of the tables, right? So now, as one of the key fintech players in India, I mean, what's your perspective on the neobanking landscape? How sustainable growth is going to be here?
So look at the India landscape, 600,000 villages and 100,000 bank branches. 80% of them are urban concentrated. So the mass India does not have true access to banking. Look at the digitized segment. If I say there are 10% digitized Indians and rest are marginalized and subsidized Indians, 90%, that's a huge landscape to cater to. And the outreach of ATMs also has been just 200,000, and most of them are urban centered or co-located with the banks. So if I may say bank hai par banking nahi, the bank is there, but banking is not there. It may not be out of place, and hence the neo banking and the variants that we will discuss today. That's the landscape we operate in.
Sure. Thanks. That's a very important point you raise around the role neobanks would play not only in competing the established financially included space, but also how do you push the envelope and kind of expand the financial reach, right? I mean, would love to come back and explore that further. But if I may bring you in, Deepak, at this point, from your vantage point, what's your take on the neobanking landscape?
Yeah, so without actually demeaning neobank, I would say neobank in my mind is just one more format. I think we spoke about payment banks, we spoke about small finance bank, we have scheduled commercial banks. We're talking neobanks. In some markets, they are digital banks, depending on the licensing. So they are just different form factors. The question today is, and I agree with what Anand started, for any model to succeed, be it neobank or any of the formats, it's important to see what is the business model and what problem are they solving. I think if there is a significant addressable market to solve for, which can be because of either the current banking models are not cost effective, or they do not have a better last mile delivery models, or they do not have the right product to support the customer segments. Yeah, definitely there is an opportunity. But what I see around, a lot of neobanks today play only on the USP of experience. In my mind, experience alone cannot be a differentiating factor to build a business model. It needs a lot many more components between technology, product, experience, pricing, delivery channels, and obviously to meet the requirements or unmet need of consumer. So I'm not saying neobanks will not succeed, but all I'm saying is the romance with neobank makes us a bit blinded. And if I was to look at it, I will look at this with all my eyes open, just like we looked at a payment bank or a small finance bank or a digital bank.
Sure. No, that's a very holistic perspective, Deepak. I mean, in fact, that's one of the trends we have also seen as consultants, right? A lot of the focus has been on the front end, right? How do you disrupt? How do you take the pain out of the customer experience? But now is the time to kind of go deeper and see what is the business model, how sustainable it is on that front. So on that note, Jakub, if I can bring you in to share your perspectives, and you've been playing in this space, examining across markets, India and beyond. I mean, how does it look from where you are?
So, I mean, I think that everything that has been said so far is correct. And if I'm just connecting to what Deepak said in terms of importance of customer experience and the focus on the front end versus what are the actual foundations of the business, what we see is the fact that neobanks are able to do great things when it comes to customer experience. Some of them we'll see as the main purpose and the main differentiating factor. But for those that are really clever about this, it's just an outcome of how they are set up. Because the big difference that neobanks and incumbents have is that neobanks basically have very flexible and agile technology stacks, which means that it's just easy for them to do lots of things. And a lot of it has a manifestation in pretty good user experience, but a lot of it is just about being able to bring innovative services quickly or partner quickly with those that might have some parts of the offering that you're missing from your portfolio, or perhaps just being able to look at yourself as a technology provider that enables others doing things. And from our perspective, especially looking at Western Europe and UK market as an example, the challenger bank, or in general banking space, is extremely crowded and competitive, which means that banks that have tried to succeed purely on user experience are failing. And we have examples of neobanks that are already folding down or being closed, just because the fact that if you are coming with user experience, there are players that have already built the reputation on being able to do this in a great way. So that's on its own, it's not enough. So it's the question of what's beyond that, but then the advantage of being flexible and agile with your technology stack helps, because it's much easier to just figure out your own niche and add those specific things that you like to focus on, when compared to, well, most of the incumbents.
Sure. Thanks for that perspective, Jakub. And I think you make a very important point, right? I mean, how agile is your technology is not just a technology question, but it's also a business model question that Deepak alluded to, because a lot of this is built on ecosystem partnerships. So we'll come back to that thought in a moment. But if I may go around the table and kind of switch gears a little here, and Ajay, the question is for you. Again, from your area that you are operating in transaction banking or the wider corporate banking space, a lot of the digital banking action, if I may, that we've seen, it started with payments, a lot of exponential growth in payments. The retail financial services is where a lot of the focus around the customer experience has been. But on the corporate side of things, right? I mean, how do you see disruption, innovation coming in there? What role do neobanks, traditional banks, and their collaboration going to play in that? Would love to hear your thoughts there.
Yeah, sure. Thanks, Suchintan. So there two parts to your question. One, what's really happening on the transaction banking space, and second, we'll come to how do neobanks kind of play a role there. So if you look at the transaction banking landscape today, it's really there's been a paradigm shift in what transaction banking was generally becoming a more commoditized product business, but now with the advent of digital technology, it's really now getting reinvented to become a digital solution provider, whether it is corporates, financial institutions, fintechs, in fact, I would say even the government. And really, the secret sauce is by building faster, more flexible concept to market technology driven capabilities. So that's really where the transaction banking landscape is going. If you look at what has triggered the change, it is, I would say, corporatization of APIs has been a big catalyst for heralding this change. Instant gratification, reconciliation, customer experience, these have traditionally been the buzzwords in the retail space. But with treasurers, CFOs, who are used to such experiences, in their personal lives, with the likes of Amazon or the Ubers or the Swiggies of the world, they really expect the same UI, UX, or products, from their banks on the corporate side. So this has really forced the transaction bankers to reinvent themselves and drive innovation solutions, through the use of technology, keeping customer at the heart of development. And if I may actually steal my co-panelist Anand Bajaj's often quoted words, sachetized banking, was introduced. To the extent that even trade finance, which has traditionally been a very paper-based, intensive, manual-intensive process, is also not untouched. This has, of course, been triggered both regulatorily as well as through bank-developed technology. So it's been a hybrid push, I may say, and we see huge innovation with paperless or blockchain-based cross-border remittances, API-driven, real-time digital supply chain lending, and also use of data becoming the new normal on the transaction banking side. So lastly, on this point, the innovation has been mainly driven through either development of it's a blend of in-house technology plus what banks have developed in partnership with fintechs and tech firms. Which actually brings me then to the next part, which you mentioned, that where do you see, the role of neobanks? And here I have a bit of contrarian view than what I heard earlier. So in my view, again, there is actually no question of will they disrupt or will they exist. The fact is that they are here to stay. And really, from my vantage point, in my dealing with neobanks, I don't see, I don't see a lot of them, especially in India, restricting themselves to only user experience. A lot of it, also is supported by very, very robust, product development. And, if I may say, neobank is no longer a buzzword for only fintechs. It's actually equally, important for banks. And, the key success factor is full digitized digital offering which catalyzes a superior customer experience. So as I said, in India, we are seeing these neobanks more or less becoming or coexisting, with banks, given that they don't have a legal license, from the Reserve Bank, so they end up partnering, with traditional banks to co-offer, their solutions. So what started with disruption in the payment space is now grown to more corporatized services like account opening, credit debit card issuances, account dashboards, investments, instant loans. You name it. It's only growing. So really, the reliance is on bankers' trust coupled with the agility and innovation, that we see the fintechs, which is resultant is obviously the optimal product which the client is getting. So lastly, I believe agile for an agile bank evolution in neo banking is an opportunity to reach more customers more efficiently, and I feel personally that bankers who embrace this change will be more successful. And in the long term, I see there is bound to be convergence between offerings of neobanks and traditional banks. We see banks will provide services to these neobanks who enhance their product offerings. At the same time, banks will also move towards their own neobanking model on the corporate side. So retail, we see it a lot happening, but I believe time is right for it to come on the corporate side. And in this age of collaboration, value of establishing the right strategic partnership is never been greater. It is required to create scale and provide product services which are more faster, cheaper, and easier. So that's really what my perspective is.
Sure, sure. No, thanks. So you make quite a few very valid points, Ajay. I mean, if I were to summarize, I mean, one is neobanks are here to stay, right? That's your firm belief from a sustainability point of view, but they have to go beyond the experience layer, as Deepak was also mentioning, and you're seeing some very encouraging trends there. It's good to hear. At this point, if I can bring you in, Anand, and to carry forward what Ajay just mentioned, right, about expanding the envelope, right? How do you kind of expand that? You're doing a lot of interesting work with hyper-local fintechs. I mean, what's your perspective there? And again, the same question that I asked Ajay, right? I mean, how much of it is collaboration versus competition in your space that you operate in, right? How much are you competing with banks? What's your take on that?
We don't compete banks. We
Sure.
work together. We are in it together. And umpteen times demonstrated, we go to the end of the rope for whatever it takes. And the good part is that banks like what we do. We don't serve customers. We serve citizens. We serve 150 million citizens. That's a higher pedestal. We treat them much at a higher level and differently than one would to a customer. Of course, money comes in, nothing denying that. These 500,000 retail touch points that we have created in the last 5 years serve these 150 million citizens. With regard to certainly clear on not competing, I'm reiterating that otherwise we would not be here if the banks were not here. The reach that 100,000 bank branches have done, we punctuate them with our 500,000 retail touch points. So we are overriding and shadowing them together. That said, with regard to the learnings during the pandemic and with regard to the context to neo-banking, we saw that banking is broken. And without mincing the words, 400 million WhatsApp users, only 100 million UPI users. Where have the 300 million gone wrong? There are gaps we have identified, we are at it. 115 million debit cards out of use for the masses because of chip and pin compliance. Bank hai par banking nahi. The card is there, but it does not work. In just November 2019, the trust of our retail partners has been augmented by the government giving cash back to the citizens. The DBT, that subsidy that was given out in the bank account, we actually gave it in the hands. You call it neo banking, you call it open banking, you call it banking correspondent. I am absolutely good with it. And to quote Galib, he said, "Jalaye the charag humne didare husn ko, hame kya malum roshni hogi." We are doing what we are doing. You name it what you like to, that doesn't matter. But that trust factor, which has been augmented with the government cashbacks, has helped a customer to come and tell my retailer, 2 किलो आलू, 1 किलो प्याज और 250 रुपया का FD बना देना भैया, right? A packet of chips, a bottle of Coke, Jakub, at a retailer shop, and 250 rupees of FD. Because if you go and queue up a bank branch to make a 250 rupee FD, he would stare you up and down. And dare you ask account statement, he would come home and shoot you. It's not possible. So many customers coming to the branch is just not possible. Just digital is the way. Assisted, trusted retail network is another way, where I mentioned 8% of India is digitized. I would be open and say they are digital savvy greedy segment, DSG, the digitized segment. The rest are marginalized and subsidized segment. That is big enough, 92% segment, which is where we play and serve. The learning also has been that we have become a national asset during the pandemic, and we are going to rebank India. I would leave it at that.
Sure. Thanks, Anand, for that perspective, and thanks for invoking Ghalib. So that was pretty refreshing. Over to you, Deepak, and if I can bring you in with a little bit of context and taking over from what Ajay and Anand said. I mean, what I heard them say and what resonated was the trust factor, right? I mean, A is trust, and B is, of course, expanding the envelope and taking banking where it doesn't exist today. Now, of course, you in your organization have done some pioneering work in building a digital brand inside out, right? Coming up with a completely digital bank option. And we've seen a lot of other banks also take a leaf out of that. Now that onboarding journey has been simplified to a large extent, where do you see as the next innovation coming from? I mean, in the context of digital banking.
Yeah, I think 811 for us has been a path breaking of sorts much before the conversation of neobanking started in India. And it definitely did help us significantly grow our customer base. 3 years back, as a bank, we had 8 million customers when we launched 811. And in 18 months after launch, we moved from 8 million to 16 million customers. So we almost created a new bank, equivalent of the customers in 18 months as what it took us probably 15 years. So I think we have seen the power of compounding through digital. And I think that also gives us a confidence that the incumbents, so as what we call ourselves, have ability to build a digital bank ourselves. Not to demean what all the neobank folks are doing, because they inspire us. A lot of them probably are worth imitating the way they have been looking at problems, customer insights, redesigning customer journey, creating small value products. For example, when we launched 811, we created many sachet products which as a bank we would not have thought of. We have a term deposit or a recurring deposit for those who are digitally enabled, like Anand rightly said. A customer can even open a recurring deposit today online with us for 100 rupees. We have enabled that. Or probably can start a SIP, a systematic investment plan, with 500 rupees. Or take a small insurance with 365 rupees. So the whole idea is, as a bank, we looked at building a different business model completely as a part of our ambition. Having acquired, as I said now, probably over 10 million customers, I think we have also demonstrated scale of what one can achieve within the bank. Creating products, building analytics. For example, we started offering something which, how do we build credit history for consumers in India? Because a lot of them just do not have a credit history. So we started creating credit products today, which gets offered through this platform, which is backed against a deposit, but it gives you a card so that you can use it for online shopping or making certain payments. And in turn, you build your credit history. So I think this journey for us has been quite insightful. And without sounding arrogant, I believe there are two models. When we talk of incumbents always had scale, but they lacked the speed. And when we talk of neobanks or fintechs or startups, I mean, I call them as insurgents, because they are looking at getting into spaces which have not been solved well, either because of friction or inefficiency or customer apathy or whatever are the gaps. And they use speed to acquire scale. The question is, can incumbents get speed before insurgents get scale? And I think that classic debate will continue to happen in any market. Today, a large platform player like a Google or Amazon is trying to build as much into financial service as a neobank is trying to do, or bank like us will do. In my mind, three types of models will emerge. Some banks who will not have the full experience, ambition to build at scale. They will continue to look at technology and balance sheet as a way to partner and find new customer segments and get experience. There are some banks who will continue to play the game both at experience layer as well as at the product and the balance sheet layer. Will all banks be able to do everything? Answer is no. And I think we have seen this model in US, we have seen it in Europe. I think banks will have to obviously see which of these games do they want to play, because all of this requires very different set of capabilities. If you want to be a bank who wants to be a great partner for a lot of startups, it requires a very different mindset and capability to invest on technology, resilience, infra, APIs. But at the same time, one should be ready to let go of the experience layer. Vis-a-vis, if one wants to do both, it needs to have two different DNAs within the same firm, which is not easy. And that's why I said there are no easy answers. I'm not saying one should do, but I think depending on what works best for each entity, and within that, more than neobank, I see there is a huge opportunity to collaborate and co-create new products through ecosystems and partnerships. And that I think every bank is open to, including at Kotak.
Sure. Thanks. That was very succinctly put, Deepak. I mean, the dichotomy between scale and speed and the two-in-a-box model. I mean, that's something we're seeing playing out across markets. And if I can bring in Jakub at that point, Jakub, what has been the experience of what you've heard the panel say so far, vis-a-vis the success stories that you've seen playing out, especially in UK and the European markets?
Yes. So I think that there are a couple of different models that we see working, and also banks that we are working with or observing on the market are looking at things and trying different approaches. So there are probably three big waves that we are observing. So one is inevitably related to open banking. That is a reality in Europe, and after like long period of wait, we actually start to see some results there. And this in itself has pushed banks to look at creation of partnerships and trying to find places where you can have third parties that are adding value to what it is that you're offering. And there are a couple of success stories. Interestingly, this is also a space that probably was bringing most, and it is still bringing most of the new features towards small and medium businesses as opposed to retail customers, because it just happens to be that the SME segment tends to be significantly underserved because it's neither retail banking nor corporate. So there is a lot of things that can be done. And at the same time, especially nowadays, there are lots of special needs that those customers have because of changing business models, because of shift from one way operating to another, and so on. So this has been a big factor. But looking at more kind of holistic experience, the two remaining models are looking at fintechs, but not necessarily, or partnerships, but not necessarily in a way that would be open and balanced, and rather trying to bring some of those and have them embedded. So, I mean, it is inevitable that a large financial institution is not going to necessarily look at partnering with a fintech, especially a small one, but they are increasingly open to bringing them on board, even investing or basically having them as someone that works on the inside and helps to cut through red tape and helps to accelerate certain things. But the trend that is probably most interesting from the perspective of discussion about neobanks is incumbents launching their own neobanks. And this has been a trend all across Europe and not only. And we see this as an answer that is typically looking at three big questions. So one, it was pre-open banking, push to have your presence in the space that most of the banks were anticipating is going to become interesting and potentially is going to create actual challenges. So many of the banks decided to launch their own, even under new brands, their own standalone open banking based operations in order to prevent entry to new challengers. The second push was genuinely looking at acquisition. So trying to create new propositions, trying to address some specific markets, as an example, doing something that would be very cool and gamified towards millennials, as United Overseas Bank has done in Southeast Asia, as an example, with a little bit of help from us. And finally, the third, which is probably the most sustainable approach to this, was to look at launching challenger proposition, but not necessarily create pressure for acquisition and massive growth, but rather see this as a target platform for the bank. So instead of trying to go through complex modernization processes and try to improve your operations and try to spend millions on those small things that you are going to gain in terms of user experience at massive cost because of the backend challenges, many of the banks are building parallel technology stack that, when it gets mature enough, is going to become the target operating model for the whole. And we've seen those operations making it difficult for neobanks that genuinely want to have a business that is growing and it's bringing value to the customers. But on the other side, all those tend to be relatively standard, which means that there is still huge area in terms of creating a niche for yourself. And we've been seeing big pressure on challengers, those that didn't get to scale, to look at some other way of defining themselves, because otherwise, of course, it's a bit too crowded to just function and hope that you are going to simply copy those that were successful.
Sure. Thanks, Jakub. Very fascinating perspectives. I'm sure this is a topic that's close to all our hearts and we can go on and on, but I'm also mindful of time. We've almost ran out of time. So it's fascinating discussion, hearing all your perspectives. I think if I were to summarize, I mean, there are obviously some of you who feel that neobanks are definitely here to stay as long as the business model is taken care of. As you mentioned, there's a lot of ground to be covered where banking doesn't exist today. And that's a place where a lot of collaborative efforts are going to come in. I'm sure there are learnings from international markets to be looked at, as well as we set the benchmark ourselves as India grows as a market. So on that note, thank you everyone for this discussion. Back to you, Muskan.
Thank you so much, Mr. Chatterjee. Thanking all the speakers. Truly, this was a very, very interesting discussion, and there was no better way we could have started day 3 with. Thank you so much once again, all the speakers.